Hello. Today we're going to walk through exercise 1111, which is calculating net cash flows from operating activities. I'm going to have to scroll back and forth because the screen is wider than what I can record. So we'll look at the left side first. This is the cash flows from operating activities. It starts with net income, which comes from the income statement over here on the right. So net income is $130,000. So we start there. Then we make adjustments for the things that we need to convert from accrual basis accounting, which is how we get net income, back to a cash basis. So we're going to adjust for things that are different. Okay, the first thing we're always going to do is add back the non-cash expenses that were deducted in the income statement. Most obvious one is depreciation expense. That is not a cash expense. Now, you may also have amortization expense if you have amortization of a patent or something. Okay, but that's the first thing you're going to do is add back the non-cash expense. Then we're going to look at the current assets and current liabilities and look at the adjustments or increase or decrease during the year. And that's going to give us the amounts for our adjustments. So let's look down at this part. Okay, so cash beginning and ending, that's going to show at the very bottom of the statement of cash flows, not relative to the operating activities. Okay, however, accounts receivable decreased by $8,000. Okay, if accounts receivable decreased, that means we collected more cash. So that's going to be a positive adjustment of $8,000. Okay, inventory increased by $25,000. If we increased inventory, that means we spent more cash. So that is going to be a negative in the adjustment. Okay, prepaid rent. Next one. $3,000 decrease. So if we decrease prepaid rent, that means we had rent that we had paid in the past. So we actually paid less cash for rent than what we deducted. So that's going to be a positive adjustment. Okay, on to the liabilities. Okay, accounts payable increased $13,000. If accounts payable increases, that means we purchased more things but didn't pay cash. So again, that's going to be a positive increase in this category. Okay, income tax payable decreased. So if a payable decreases, it means that we paid more cash. So it's going to be a negative in this calculation. Okay, so then we start with net income, add and subtract all the pluses and minuses here to get to the net cash flow from operating activities. Thank you.